Okay, very good morning, Tuesday 30th of May. So I hope everyone had a enjoyable long weekend. But straight down to it, and let's have a bit of a look at the charts this morning and talk over some of the main news flow that's occurred both over the weekend and yesterday. And the chart that probably sticks out the most this morning is that of the euro currency. And as you've probably been aware of, some of the headlines been in circulation already this morning. Quite a bit of focus on Italy and also on Greece as we get closer towards what we were talking about last week, a real key critical part for them in terms of a large number of debt that needs to be repaid in the month of July. And so taking a look at the euro here, just making that chart a little bigger, we've had a reopening of trade from last night. Remember, we shut a little bit earlier, electronic trading, just given the fact that UK and US were out of the market yesterday. So yesterday overall session was fairly quiet. You can see here with the price action in the euro, a fairly consolidative range from where we finished on Friday. But we gapped down this morning, and so where does that put us in the context of the broader perspective? Well, we're still relatively high in terms of the pair and where we have been. Certainly the big run up that we've had through the beginning of the year, we had that gap up of an aggressive nature on the back of that first round of the French election. Confirmation of the Macron victory led to some brief profit taking, but then weakness in the dollar predominantly. The kind of growing concerns about potential impeachment of Donald Trump, the outlook for his policies being implemented, being questioned, the dollar weakness in comparison to the relative economic strength that we've had in the Eurozone, very much reflected in recent PMI data, seeing euro-dollar just continuing to push to the upside. Got close to 113, now we've pulled back down, and so we're within midpoint of 111, the 112 handle. So still some way to go on the downside if the ECB, as seemingly it would seem, are going to try to influence this price back lower to be more favourable for what would be some of the export more related names, particularly in the country of Germany. So in terms of the ECB then and what they've been saying, let's start with that as a headline reading. This was in the FT yesterday. So Draghi firmly convinced of a need to stick with QE. Got to give a shout out to my man Jose Stubbs, messaging me in the crack of dawn when this story got released on Saturday night. Jose, if you're watching this, you really should be out doing more interesting things than looking at the FT newsfeed on a Saturday night. But he messaged me this, and he was saying that he'd be all over the euro short when the market reopened, and definitely right. It almost seemed like a matter of time before the ECB would want to step in and start to counteract some of this euro strength. And this is about as explicit as it comes. The Eurozone still needs an extraordinary amount of monetary support from the European Central Bank in spite of its growing economic recovery, is what Draghi said. He told European lawmakers in Brussels that he was firmly convinced the ECB to stick with measures that have been controversial in Germany, including the 60 billion euros of monthly bond purchases to try to underpin the economic revival. So remember, the talk with the ECB has been very much with inflation generally edging higher, but economic performance appearing to be fairly robust. We've had the German iPhone number just a week ago coming in at all-time highs, so optimism in the kind of engine room of Europe still very much alive and healthy at this point in time. And so the talk has been about potential communication changes from the ECB in the month of June, for then an ultimate move away from such an accommodative stance towards the end of this year. But this kind of puts that to the side, certainly, and hence the reason why the euro has depreciated this morning. This is certainly one of the key drivers which is weighing on the currency. Alongside this, there has been some commentary from other members, both of which tend to sit on the more hawkish side, one more than the other. But first of all, Novotny, who's the Austrian representative, spoke yesterday and said that sees positive news on growth, but on the other hand, he still needs to see evidence that this is sustained. And then the Uberhawk, Jens Weidmann of the Bundesbank in Germany, said that in light of subdued price pressures, an extraordinary monetary policy continues to be appropriate in principle. So even your most kind of hawkish leaning central banker is now saying that actually what's actually in place at the moment appears to be fine in principle. So it's quite a big turnaround in some of the commentary. Thought that this would come at some point or another with this euro up at its most elevated levels we've had in several months. The other thing though is political, and so this is one of the other comments that's come out this morning. ECB's Draghi saying that ECB will not buy Greek bonds before a debt deal. So the ECB will not consider Greek government bonds in its asset purchase programme before a pending bailout review is concluded and creditors agree on how to ease the country's burden. Now this is important because there was an article which circulated yesterday evening, I believe, and it was from the Bild newspaper in Germany, and Greece were basically saying that they were not going to take the 7 billion euros of bailout tranche that they so much require ahead of the summer. This then resulting in talks breaking down, so they're using it as a bit of a threat. But this has been denied from Greek officials last night as well. But this has obviously brought back to the forefront this pressing need that Greece really needs to get the deal done in the coming weeks ahead of that July period. So some nervousness about the Greek situation, whether or not they'll have adequate funding and they can make compromises with their European creditors in order to get the cash that they need. Then you've got Draghi and the ECB officials turning quite clearly dovish. And then the other big thing is Italy. So it's kind of a trifecta of reasons weighing on the currency this morning. And with Italy, this is the main headline: Italy moves toward early elections. This was always the big risk. You know, people were pretty quick to suggest that, well, political risk has dissipated substantially now that Le Pen has been avoided in terms of that risk. Macron is now in place. But this was always one of the biggest ones, and this particularly given the fragile situation in Italy, and most notably with their banking system. If you remember back in Q3, Q4 of 2016, this was probably one of the key contributors to increased volatility at that point. This is when Monte dei Paschi, one of the world's oldest financial institutions, was requiring kind of a lifeline, if you like. And then it was prompting consolidation of the Italian banking sector in order to safeguard the system. So Italy is certainly a big risk for this year, and this article is interesting because what it's suggesting is a possible new electoral system in Italy which could allow an election to take place as soon as this autumn. At the moment, the scheduled election in Italy is not actually until next year in 2018. The former PM Renzi said that Italy voting at the same time as Germany, remember that happens at the end of September of this year, would make sense for many reasons. Renzi said that he favoured a German-style electoral system based on proportional representation. Over the weekend then, the anti-establishment Five-Star Movement, that's Pepe Grillo's party, his supporters overwhelmingly backed a proportional law modelled on that of Germany, in which parties must secure at least 5% of votes to get into parliament. So, key question then is, how, if there was going to be a vote tomorrow, how would the result look? And consequently, you have to look at polling in Italy to get a better insight into that. And of the last 10 opinion polls conducted since the 18th of May, the Democratic Party, or the PD, leads in 6 of the 10, and the Five-Star Movement, which is the Eurosceptic party, they lead in the other 4. The margin of error, though, or the margin between the two parties, is plus or minus 2 percentage points. So very, very close. If you think of something like Brexit, the margin of error there was about 6.3 percentage points. the margin of error, and we'll look at in the UK election, is something like 6 to 14 points. This is 2. And given the fact that it's only 2 other parties, the Forza Italia and the Lega Nord, that were qualified for that proportional cut-off of 5% or more, this raises the possibility then of a hung parliament situation in Italy that generally, from a market reaction point of view, creates negativity, uncertainty, and generally a flight to quality type move is seen. So going back to the charts then, hopefully that explains a little bit more why the euro is down about 43 pips already this morning. Looking at the currencies, actually you've got cable, bearing in mind the markets were very quiet in yesterday's session, but there's a bit of divergence between the 2 major pairs. Cable is slightly higher, euro slightly lower. The dollar index actually is up about 0.25% this morning. European equities, this story, I'd say, on the politics is probably more directly translated into the FX move. Certainly if we flick over to bunds, well, just actually looking at the DAX here, just while I'm talking, this tends to be the type of market movement we've become accustomed to. The DAX just surging higher here in the last, this is 1 minute candlestick, so this is a 2-minute move. We've just broken pivot, and we've broken the upside from earlier this morning, and it looks like we're targeting then the highs that were seen towards yesterday. It would be up at 12,645 if that were the case. Nothing I can see fundamental that's come out, but certainly you would think that if the ECB were going to turn dovish, then this should be a supportive factor for European equities. You know, equities tend to respond well in a lower for longer type scenario. So a bit of a pop here in German equities. Other indices are following suit as well. Just taking a quick look, doesn't look like anything fundamental behind this move, but what tends to happen is that you'll probably hear people try to pin a news item to it, which I think this is more just a case of overall a little bit of further digestion. Now the cash markets are fully underway. I'd be keeping an eye on that yesterday high print, but the DAX, as you know, a very volatile instrument. Bunds then a little bit lower, looks to be more pressured by the slight recovery we're seeing in equities at the moment, so despite some of the dovish calls from the ECB. And a quick look elsewhere at oil. Obviously OPEC meeting was the big focal point of last week's session. You had this big run up towards 52 when we look at it slightly more long term, as the market priced in 9-month deal being done. It got done, therefore you had a bit of profit taking on the move. Pretty swift $4 drop in that actual session in the evening, and now we've kind of stabilized around this $50 handle, if anything trading a midpoint between pivot at 49.33 today and then the $50 on the upside. The high point from yesterday's session to keep an eye on, I guess, in terms of range on the day, you got 50.28, then 20 cents above there, the 48 mark, which would be the R1 on the day. Downside, you've got that double bottom seen down at 48.21 if we were to get through S1 to the downside. My feelings on crude still tend to be one of, I guess in the more medium term, more bearish, given the factors that I think that they'll continue to struggle with compliance across the board. Saudi will continue to shoulder that burden, as that was evident with them over delivering on their cuts, while the non-OPEC nations like Russia didn't even hit their target or quota. At the same time, US output I foresee continuing to go up, because in this current setup or context, there's no reason really for the US to withhold from just continuing to increase output. Because if OPEC intervene and the prices go higher, then that's good for the shale companies. They make more money, therefore they can reinvest and put more facilities online. If the price goes lower, then you know that at some point OPEC will feel the pain, as they did previously when we got to 44, which was here. That was when OPEC started really talking up the market, So if I was shale, I would continue to still pump output or increase it even at that point, because you know that OPEC will give in and start intervening and cut production again. Even when OPEC did the deal last week, there were some touted options about a 3-month extension, even on the 9 months that they'd already agreed. And at this point, the agreement is still for 1.8 million barrels per day production cut. They, of course, could go deeper if necessary. So the longer term game, I think, is that if US output continues to rise, then the market's going to continue to be well oversupplied. And so the top side at 52, I think, might define the broader range for the coming weeks. We shall see. Okay, let's move back to a couple of other news items that have come out. Going to the pound now, looking at Theresa May and Jeremy Corbyn. You probably saw a TV debate that was hosted by Paxman last night, of which the two went kind of head to head. I would say both of them came out relatively unscathed. Theresa May just being questioned a lot about her recent U-turns on the likes of the dementia tax and so on and so forth. But what's been quite interesting is that now it seems, reading the press this morning, that Theresa May has changed tact slightly into the final kind of run up to the election, which, don't forget, the election now is going to happen next week on Thursday. So we are getting, well, it is creeping up very quickly. And so what Theresa May seems to be doing this morning is turning the argument back to Brexit, which I think is probably a sensible one, because I think if most people, irrespective of voting for a party, were to say, who would you like to negotiate Brexit, I'm pretty sure that would be heavily weighted to Theresa May rather than Jeremy Corbyn in that specific point. Can't really go 5 minutes these days without talking about polls, and just to give you the latest insight as to how they currently stand for the UK election situation, there were 5 polls published on Saturday that had the Conservatives between 43 to 46%, Labour 32 to 38%. That puts the difference then ranging between 6 percentage points at the low to 14 at the high. So there is quite a big disparity amongst the pollsters. And why is that? Well, it comes down to the actual methodology, because if you're looking at that range of percentage differences, that could be the difference between a wafer-thin Conservative majority or an outright triple-digit landslide. So it's obviously a wide divergence there. And there is a bit of a difference because there's the way of the makeup of these particular polls. As you can see here, this gives a graphical kind of representation of YouGov is one of the most tightest between the Tories and Labour, whereas the ICM poll is probably the most widest. Now, YouGov, the narrower lead to the Tories, how that's made, essentially, the poll, is those that assign probabilities of voting based wholly or primarily on a respondent's self-reported likelihood of casting a ballot. That means then that it would be inclusive of young people, of which Labour have managed to kind of cultivate in order to gain interest into this particular election, particularly via social media. So that's been taken into account in terms of reported or self-reported likelihood of casting a ballot. The problem is that history would tell us that young people don't tend to vote, despite they might have some interest when it comes to actual voting day. For whatever reason, they tend not to vote. And so the Comres and ICM model turnout is based on historical figures for demographic groups. So this then goes down into which method do you think is going to be more accurate? Because if you're looking at demographic groups, then obviously there's a much higher proportionate turnout for the elder people, and therefore it's much more highly accurate to look at it that way, going off history's sake. The only question you have to ask yourself is it any different this time? So accordingly, which of the two approaches provides the more accurate picture depends on the historical patterns, as the FT are talking about this morning. Some have pointed to a surge in applications to register to vote among young people as evidence of increased enthusiasm, this is possible, but the data have only been available for one previous general election, so still it's very hard to draw any solid conclusions. But overall, I would continue to monitor these closely, but I would say the likelihood is I don't think we'll see much movement really from the current spread, which is 6 to 14 percentage points. Looking at the pound this morning, let's make it a bit more longer dated so we can see the kind of story that we've been on. And after we got up to that 130.59 peak, we've had a bit of a breakdown towards the end of last week until we've stabilized here. We found a bit of resistance at this 128.46 level, which, as you can see, was that previous spike low that was seen around that morning on the 4th of May. And then you can see the bottom end of the range here. You've now got kind of this double bottom here from the low of the 21st, and then the low that we saw most recently back at the end of last week. So a couple of levels really to keep an eye on here, I guess, for the day and the week. I would say this 28.46 is quite interesting where we trade at the moment. You've then got the high point from yesterday seen at 58. Any move above there be targeting then solid resistance at 129 handle psychologically, and then you've got that low that was seen on the 18th, and then downside that double bottom seen around the 27.76.80 level. So I'd be expecting to hear a lot more about polls, a lot more talk about election commentary from the various parties as well, should be forthcoming over this week, in particular as we countdown begins for the actual vote itself. Okay, quick look at the calendar for today. We've already had some quite interesting data, that being the inflation readings from the German states. So just having a quick recap of what we have seen thus far. If I just go back to my news feed to see who's come out. German state of Saxony looks to be the only one thus far. Month on month, minus 0.1%, same as previous. Year on year, 1.6% against previous 2.1%. So still fairly benign, if you like, inflation. Nothing that I think would make the ECB officials want to change tact from what was being communicated at the weekend. You'll get the various other German states coming out throughout the morning, that culminating in the pan-German national CPI at 1 o'clock, which will then be a non-event because we'll know the proportionate breakdown. This cluster of data you've got at 10 o'clock, although it sounds interesting, economic sentiment, business climate, consumer confidence from Europe, this very rarely does it move the market. I'd probably classify this down as tier 2, if not tier 3 economic data. Otherwise, looking to the afternoon, you've got personal income spending from the States. The PCE number is something which the Fed do track closely, so that will be something to watch out for at 1:30. The S&P Case-Shiller data is largely a non-event. Consumer confidence, though, from the US could be interesting. That's been tracking at relatively high levels, close to pre-financial crisis. So that'll be at 3 o'clock. And then speaker-wise, you've got ECB's Liikanen, 10:15, and Fed Dove and voting member. But quite interestingly, speaking the economy and monetary policy, Brainard, she's speaking at 6 PM this evening. So some quite interesting things on the calendar. Overall, though, I would say the main kind of take-home from where the news lies from a macro perspective is a little bit of increased uncertainty on the European situation. This emanating from potential now increased probability of a snap election, giving a push on possible new electoral system coming in Italy. You've then got the ECB turning more dovish in regards to Draghi, Novotny and Weidmann, and then the Greek situation continues to kind of get more and more importance as we get closer towards the heavy redemptions they have looming in the summer. So it's really critical that they get a deal done, which I'm sure they will at the 11th hour. Otherwise, the polls remain fairly tight in the UK, all to play for still, so to speak, but still a market fairly comfortable, I think, with a majority to Conservatives. It's just whether that will be a slim majority or a landslide is the question mark at this given point in time. Okay, that's your brief. So good to see you all. And back in the markets today. Any questions, feel free to put any questions into the chat room. Vas is away, by the way, so Piers is stepping in, as you can see in the background. So happy to help. Okay guys, have a good day.